Hey folks, T-Buzz here. This is this week's video release, but there's a high degree of risk involved in trading. You got to manage that risk if you're going to be successful trading options. And past performance is not indicative of future results. Sometimes you have to make modifications as you go forward. Now, if you subscribe to my YouTube channel, it's free. I do these videos. My goal is to put a whole bunch of proprietary videos on here that might help you on a subject that you're unclear about, that maybe I learned from the School of Hard Knocks. But you go to youtube.com/@TBuzzTNT. Now, I have a customer service live that you can go to at www.dtitrader.com/help. It's open Monday through Friday, 10 o'clock to 1. If you hear me say something, need clarification, go here and make sure you understand fully what I was saying if you hear me say it. I love to have things cleared up by you going to our customer service live. Market timing DTI style, the DTI method. This is something I believe in, I've developed over the years, and people always ask this question when I'm in a live, how good am I at market timing? And I always get great ratings because we put a lot of emphasis on this. Wall Street says you can't do it. I beg to differ. The DTI method. At DTI, we believe in tracking the opens. You won't hear that from anybody else. We track the opens. And as Jeff said, the race never starts at the close, it starts at the open. And here's an example. If you ask somebody how they're doing this year, they're going to look back to when they opened the trade and see how they're doing. Or they're going to look back to the first of the year to see how they're doing. Everything starts over on that first trade day of the year, and it becomes very important to know those numbers. The year open. Always capture the year open for stocks you like on the first trade day of the year. What we do here, we take a screenshot, we put it on the wall because we can refer back to that throughout the year. Here was this year's screenshot for 2024 and the stocks at the time that we were interested in. We got a full array of ideas there and to keep up. And it's so clear to you when you get 3 months, 6 months, 9 months into the year, what these stocks have done, whether they're above the open or below the yearly open. And I've seen stocks go up, like gold, for example, was down at the first of the year, below the yearly open, then reversed above it. Now it's up 12%. Wouldn't you like to have a 12% gain, knowing where that trigger number is, which is the yearly open? Now the month open takes you in a little closer. I use the monthly open for opportunities for trading by the week. The month open brings that opportunity right to your desktop by knowing what the monthly open is. Now the opens of each quarter weigh a little bit more significance than each month, but the opens is the key terminology you got to know. And here's one for those people that's followed me for years. The October open for me is like a new year. If you know, that's when the government starts their new fiscal year. So that's an important open you got to pay attention to at the end of the year, the October open. Now the week open is what I do. I connect those. If I'm above the yearly open, above the monthly open, and above the weekly open, then if I'm going to trade that stock, I want to be above Monday's high, Monday's low, and that's why I call Tuesday trade day. The day open is every day. Now for stocks, it starts at 9:30 in the morning, but for futures, it starts the night before because futures incorporate the 24-hour market, which is going to give you the insight to know where money is flowing to. You don't have to listen to TV to figure this out. You can watch it develop around the clock. If you got good tools and software, you don't have to stay up all night like I did to learn this. Now, we developed something that a lot of futures traders use in this industry because we branded it years ago, and it talks about coming forward in the evening through Asia, starts at 6 to 6:30, through Europe, which starts at 4:30 to 5, in the pre-market, which starts at 7 to 7:30, first hour starts at 9:30 to 10, Genesis bar, which is a noon bar, 11:30 to 12, is a very key bar for the 24-hour market. And then RB4, which is in the afternoon, 1:30 to 2. And then we have what we call the closing bell trade to get a head start on that night looking for opportunities to closing bell stretch. Now, DTI specializes in the 24-hour global market with these RBs because they show you the flow of capital into stocks and futures as they develop. That's why people love what we do, because we're always a step ahead of the printed newspaper by using this approach. You need to learn it. Save yourself a lot of money and time and educate yourself. We have a paper we're going to give you. It's called Reference Bar White Paper. Go there, read about it. And if you got questions, go back to that customer service part of DTI. Remember, DTItrader.com/help, and get your questions answered from 10 to 1. Now, if you take a big picture view, it's what I do every day before I ever think about pulling the mouse. I'll look at the year open. I'll look at where we open in the current month, which is May, and I'll look at the current price. And I will look at the year-to-date change and say, okay, what is this market doing? Standing back, looking from these heights, it's very easy to see. The E-mini, the NASDAQ, the Dow, the DAX is very strong. It's very easy to see. Gold should be in your portfolio. It's very easy to see. Crude should be in your portfolio. Bonds, down 6.28%. That's a long bond. So you want to have shorter maturities if you got interest earning assets right now. Bonds are negative, and that's what the big picture's saying when you look at it. Summary, what we've found over the years that tracking the numbers around the globe helps us identify the prevailing trend before Wall Street gets it. Nobody does this. We do it. The other advantage of the DTI is it gives traders the actual numbers to make decisions rather than interpreting some chart that really probably goes to your bias if you look at it. We've found using the DTI method will help improve your accuracy rate and your risk. As your accuracy rate grows, your risk goes lower. And if you study this, you know it going forward, your risk will be reduced in that process. And that's what you want to look for. Folks, as I always say, see you on the flip side.